Welcome back. Lower coal and iron ore prices have knocked Exxaro's profits. During the half-year period, the miner reported a 37% decline in headline earnings per share to 15 Rand 28, and this resulted in a 30% slump in its dividend to 796 cents. And joining me now is the company's CEO Nombasa Tsengwa. Thank you so much for your time, Nombasa. Very interesting movements that we saw there in the numbers, but I actually want to start off with the revenue line because growth there was maintained from the prior period. So really pointing to the fact that there are highlights that you saw in the reporting period. So let's actually start off with that.
It's been a very interesting period, because as you rightfully say, a part of our revenue gets hit obviously by sometimes what we find from the market. And what was quite unique this time, or maybe let me say different from before, is the fact that we had to rail more to the exports markets, which was by about 600,000 tons, which is a lot, especially using a conduit or different ports, alternative ports to Richards Bay, which is more profitable. Okay. So you could see that impact there. So that really is crazy. We had very good pricing, by the way, from Eskom, really, which actually helped us from the revenue point of view. Even though in terms of our international pricing, we started quite flat. Yeah. But getting into the second quarter, we could see recovery there. Yeah. And also having said this, I think another driver has been in our, real average realized price against the API4 index, which is quite good, at 95% of the index, which is really a function of the product or the quality of our product. So all of those factors together, have seen us at least, standing strong in as far as some of the, revenue versus now what you see from an EBITDA point of view.
Well, I mean, yeah, from the top to the bottom line, of course, we did see that growth softening on that front. And of course, I guess maybe that also speaks to the kind of cycles that we are in with the different commodities. So I actually want to start off there with coal. What are the demand dynamics looking like there, particularly in your export markets?
Coal is doing quite well, surprisingly. There has always been a view that, coal demand globally will peak in 2019, and the peak was expected to be 1 billion tons of coal, and China has always been the biggest taker. And this really has endured, surprisingly. And we do see that, globally, the demand is looking very good. But looking at just the supply, we are challenged in South Africa, as you know. Yeah. We can't move our coal because of Transnet, which then makes it so difficult for us, as we said in the past, that even though we do have a capability to produce, we have a challenge in terms of taking advantage of these prices. India is open to take our coal, especially when the price was, had cooled off. And Indians like to use those opportunities to stock up, especially as they head towards monsoon, where they will have a lot of rains, where they won't be able to export much. Yeah. So we've seen that demand coming in. We are also watching the European market, as we see that LNG gas, is pricing are going up, and there's been some disruption in as far as contracts of LNG gas from the US point of view. And by the way, we are very excited to say that our Japanese market has grown quite significantly. Japan takes high quality coals, and I think they're settling quite well and getting used to our quality of coal. So pretty good demand for us. We are very happy to have, of course, we would have liked to have exported more, yes. But for all of our coal, we've been able to place. But obviously, the margins get squeezed by the conduits, and the ports, that we use. Yeah. Including trucking and the railing of that coal to those ports.
Well, let's talk about iron ore, because that's also been quite an interesting point of focus there in the commodity market. In what part of the cycle do you think the iron ore market is at this point, and how is it filtering through to Exxaro?
The iron ore price is still quite cool. And this is all about the sentiment, the markets had about the Chinese consumption of steel, which really didn't pan out, as was expected. And that it has got a ripple effect on our operation. But the beauty for us is that, there's always this, what to call it, the complementarity in the cyclical nature of coal and iron ore that tends to reinforce each other, that we don't get a situation where both of these commodities have hit rock bottom. So as much as we had that cooling, then we're buffered by the fact that coal became quite stronger than expected. So that really makes our portfolio quite well cushioned against these winds.
All right. I think we have about 30 seconds left. Just really, focusing on what Exxaro will be looking at and kind of zooming into, particularly for the second half of the financial year.
We're very happy to report that we want to maintain our exports at 3.3. Which is more or less the same as what we've seen in the first half. We think that we're confident in the new channels that we've created to channel the coal. So it's going to be very good. We've got capacity to produce more at Grootegeluk. We've seen Eskom is taking a little bit more. So it's really good times for us in terms of really upping the volumes, taking advantage of a better price than we've seen in the first quarter. So all is good, and focusing on safety as always, so that every ton we mine is blood-free.
All right. Well, thank you so much for your time and giving us more detail on those numbers. We'll be catching up with you in about 6 months' time. That was the CEO of Exxaro, Nombasa Tsengwa.